What is the Fed thinking? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of Adam Talks. Today's podcast, I'm going to give you my thoughts and opinions about what the heck is Jerome Powell and the Fed thinking. No inflation, lowering the interest rates. I'm okay with lowering interest rates in principle, I get it, but it has to be the right time. And I am concerned that this is going to be a grave mistake by the Fed. I do not believe the economy is shrinking. I'm not concerned about the unemployment rate increasing at all, and I'm going to explain why, along with increasing prices to consume food, to travel, auto insurance, home insurance, and almost everything other than gas has gone up significantly and continues to rise. So why exactly do we want to lower interest rates? So that is today's Adam Talks. So let's go through some data. I think that helps. So just to set the stage for where we are, in mid-August, third week in August, Mr. Powell, Jerome Powell, who's the Fed Reserve Chair, he basically said this time has come for the U.S. Central Bank to cut interest rates, as rising risk to the job market left no room for further weakness, and inflation was in reach of the Fed's 2% target, offering an explicit endorsement of an imminent policy easing. And he said the upside risk to inflation has diminished. Okay, so what exactly is he thinking? I assume Mr. Powell is jetting around the country on a private jet and doesn't understand how things actually cost, like going to a supermarket or buying an air flight or a hotel or paying auto insurance, paying home insurance. So let's go through some numbers. So this is some recent information from the CPI, the Consumer Price Index. It's a measure of economic wide inflation, 0.1% from June 24 to July 24, and was up 2.9% from July 2023. Okay, still way over the 2%. And again, we're not measuring 2019, right? Our base is 2023, which is elevated, and in some cases 20, 30, or 40% elevated from where it should be pre-COVID. And my concern is we're not taking into account that COVID was this one-time disruptive event that's kind of rebalanced the whole economy. And to just base inflation and the unemployment rate and CPI on 21, 22, and 23 is not taking into account what actually it should have happened on an average without looking at the 2.5, 3-year COVID debacle. So let's look at some other details. So the level of food price varies depending on whether the food is purchased for consumption, home or away. But here's some information. The food at home, grocery store, supermarket food purchases, CPI increased 0.3% from June 24 to July 24 and 1.1% higher than July 2023. The food away from home, restaurant purchases, increased 0.2% in July 24, was 4.1% higher than July 23. And here's some data to look at particular foods. Eggs, in the last 5 years, is up 19%. Baby food and formula, up 4.6. Beef and veal, 4.5. Pork, 3.6. Fats and oils, 3.6. Okay, so food is definitely going up, whether you consume it at home or in a restaurant. Now look at the unemployment rate, which is what the Fed chair really is focused in on, why he thinks rates should be lowered. But if you look at the average unemployment rate from 1948 to 2024, that's 5.69, okay? 5.69%, that is the average. Right now in August 2024, early September, we're at 4.3%. Okay, so yeah, it has climbed up a bit since COVID, okay? But 4.3 is still super low compared to 5.69% average over the last almost 80 years. So we're saying, hey, the unemployment rate is going up, okay? But we're not, and Powell is not looking at the whole picture and saying, okay, yeah, it has gone up, but we're still at historical lows, 4.3 versus an average of 5.69%, okay? If you look at the high is 14.9%. That was in April 2020, right after COVID. And the record low is 2.5% in 1953. Okay, so we're in the middle of the lowest ever. And then if you look at the 5.69%, the average, kind of in the middle. So to just say, hey, unemployment rates are increasing, the job market's a little bit weaker, the economy's perfect, and inflation is gone, let's just start lowering interest rates, I think is a grave mistake. And I think ultimately what's going to happen is Powell's going to lower interest rates maybe once or twice, and I think he's going to have to increase it in 25, potentially 26. I think he's going to see that the economy is still strong. People are consuming, people are spending money, companies are increasing prices almost across the board, and inflation is still roaring. And if you can ask any economist, you'd rather have more unemployment than high inflation. You can solve unemployment, inflation is much harder to solve. Let's look at some other data points. Let's look at home prices, okay? Home prices rose 4.9% from May 23 to May 24. It forecasts the price growth will continue through the summer real estate season, increasing 3% by May of 2025. The median home sale price is $412,000 at the second quarter of 2024. That's 3.4% less, okay, than the quarter before, but more than 28% from the second quarter of 2020. So in 4 years, home prices are up on average 28%, okay? If you look at higher end home prices in certain markets like Florida, Texas, you're looking at 2 to 3x what home prices were in beginning of COVID. So you have severe inflation in the home marketplace. Listen to this stat. This sums it up. From 1980 to 2020, the median home sale price increased 416%, okay? From 1980 to 2024, 544%, okay? So the median home sale price increased by 416%, and from 1980 to the second quarter of 2024, 544%. So basically from 2020 to 2024, it's up 120-something%. Okay, 1980 to 2020, 416%. Second quarter of 1980 to 2024, the extra 4 years, right? 80 instead of to 20, 80 to 24, 544%. It's an extra 130%. That's what we're living at. So lowering interest rates isn't going to help that marketplace. So gas, as I mentioned, is the only thing that's been stable. Average price of gas fell 2.2% in the last 12 months. Now let's look at travel price index. Travel has come down a little bit, although I traveled a little bit this summer. I do not see that. I paid more for hotels and airfare than I had the year before, and certainly almost 2x what I paid in 2019. But travel prices are up 9% compared to July 2019. I think that's off. I think it's way higher than that, especially for mid to high end hotels. There's an article in the Wall Street Journal in I think it was August 29th, 2024, that basically said the number of $1,000 a night hotel rooms in the United States went from 22 in 2019 to 80, over 80. So 22 hotels before COVID were at $1,000 a night, now over 80. It's a 4x increase. Okay, that's real. Let's look at auto insurance. Auto insurance rose 2.6% in March. It's up 22% from a year ago. I mean, we all have cars, whether it's their EVs or gas cars. Like, we all have cars and we all need insurance. That's 22% increase. That is maddening. And if you look at average insurance rate, okay, for homeowners, it's expected to see a 6% uptick in 2024. That's on top of a 20% increase over the last 2 years. If you own a home, you have a car, you shop at the grocery store, you travel somewhat, other than gas, like, we are in a way worse position than we were before COVID. Okay, way worse. Now, the Fed was late to see this. They kept saying inflation was transitory, and they were late to rise and increase rates, and they did it swiftly from 22 really to 23. And they stopped inflation to some degree. They could have prevented it probably if they started raising rates earlier, which kind of all said we should. Again, without getting political, even Biden said it was transitory, and Powell is not politically appointed. It's totally bipartisan, neutral in terms of political affiliation, and the Fed was late. They messed up. Now, are they messing up now? I think they are. I think lowering interest rates is a huge, colossal mistake if they do it in September. I think it's going to create more inflation. Inflation is not tempered. It's not under control. It's still, I think, it may not be a roaring forest fire, but it's not contained. Okay. The helicopters are over and dumping water on the fire. The fire is still burning. And that is my concern. So some recent information why I think inflation's still here. This came out August 30th, 24. Personal spending rose 0.5% in July from a month earlier. That was up 0.3% in June. That matched, the forecast from experts. Personal income was slightly higher than forecast, rising 0.3%, while the Federal Reserve's preferred measure of inflation clocked in at 2.5% on an annual basis, still over 2%. But again, that doesn't take into account food. Now, Powell keeps saying the labor market's tightening, but personal income is still up. Okay, and it's slightly higher than forecasted, rising 0.3%. So yes, again, why I'm focusing on the unemployment rate is because that is what Powell was focused on, and one of the main reasons why he thinks it's a good time to reduce interest rates. I'm saying unemployment rate's still way below the average, 4.3%, compared to the average rate over the last 80 years, which is over 5%. So yeah, we're looking at 23 and measuring where we are in 24, and maybe the economy has slowed a little bit, which is the whole point of increasing interest rates. But inflation is not tempered. Inflation is still, I think, I'm not saying spiraling out of control, but it's definitely above where it should be. And I am concerned that if we don't really smother it, it's going to keep festering and it's going to become a harder problem. So if I was the Fed chair, I would have actually raised rates a quarter point, and I'd let that sit for 6 months, maybe a year, and then I'd start lowering. I am very concerned that if you don't touch inflation, you can get to a situation of an Argentina, you can get to other drastic situations, and inflation destroys economies, it destroys people's lives. Unemployment is bad, but there's ways to stimulate for companies to hire. And again, even though unemployment has creeped up, it's still way lower than it has historically been, and where I think the Fed wants it to be. So I am concerned. I think this is a monumental mistake for the Fed. I still think they're going to lower rates. I'm not sure why. I'm not sure it's a political reason. People are saying it's an election. I hope that's not the case. But I'm worried it's going to cause more inflation, specifically in the housing market, which is the main marketplace that, whether it's food, housing, travel, gas, right? That's where consumers feel it the most. And gas, thankfully, and we can see what's going on in the Middle East. That could change at an instant. But right now, gas has been somewhat mild, but food prices are not, right? We all know we've all gone out for food. We've all gone to the supermarket where we walk away with 3 things and it costs us, $45. I just recently went to like a coffee shop near my office. I probably haven't been there like 4 years, because I just moved offices, so I'm a little bit closer to this coffee shop. And I used to go and get a Greek salad. It was like $12.99, an egg wrap. Every day I went there, it was under $10. And I went there a few days ago, and both were over $17, right? They actually had, taped over the old prices and just changed the price. So I don't know if that happened, recently or 2 years ago, but, to 100% increase your prices in a year is maddening. And this is high-end stuff. This is like a regular coffee shop that people like you and me would go eat lunch at. So this is a problem. It's obviously impacting the low to middle income folks more than the rich. The rich don't care. They have more money, right? There is an asset bubble. Look at the equity markets. They're up double figures. Look at the price of, more aggressive asset classes like cryptos, right? Bitcoin's almost at 60,000. Ethereum's been up around 2,700 this year. So generally, when people have a lot of money, when people are still confident in the economy, those types of assets go up, and they're up, including the S&P 500, NASDAQ, and the Dow are all up for the year, double digits. So people are feeling comfortable in the economy, earnings are good, and prices keep going up. And if we if not me, but if the Fed lowers interest rates, I am very, very concerned that we're going to trigger a greater degree of inflation and a level that may be harder to temper in the future. So that's today's podcast. I'm just one person. I'm just a tax lawyer. I'm not an economist, but I do travel around the country, not just like in Miami or New York City. I go all over the country, and I'm interested in this stuff, and I don't always stay at top hotels. I'll stay at Garden Inns and Holiday Inns, and I see what things cost, and I see what they cost 3-4 years ago, and prices are not coming down; they keep going up. And I'll go to McDonald's. I actually was at McDonald's like 7 days ago with my aunt, and we bought 2 6 nuggets and 2 medium fries. It was like over $20. Like, that's just crazy. So lowering interest rates, again, may not impact food, but it's going to impact home prices, which are already astronomical. It's going to impact rental, and it's just going to make things less attainable for lower to middle income folks, which is an important part of the economy. So instead of the Fed focusing on unemployment, which has gone up, right, from the 3s to 4.3%, it's still way under 5.8%, which is the average over the last 80 years. I wish they'd be focusing on prices, right, on what it costs to eat, what it costs to shelter yourself, and what it costs to insure yourself from a car and a home. And if they did that, I don't think they'd be lowering rates unless they're flying around private jets and are totally clueless, which probably is the case. So that's it for me today. This is not supposed to be a doomsday type podcast. I am super bullish on the U.S. economy. I love this country. It's the greatest place to be in the world. But we have some work to do to cut the $3 trillion of spending that the government did during inflation. So there is some work to do. And lowering interest rates right now is, I think, the wrong move. So let's hope I'm wrong, but we shall see. That's it. Have a great day. Thanks for hanging out, and I'll see everyone again next week. Thanks.